Look at Money Matters. The JSE is trading more than 1% higher so far today, marking the second consecutive day of gains. Locally, investors look ahead to the Reserve Bank policy's decision and the MPC's tone on the future rate path later in the day. Independent analyst Mbuso Zulu gives us an overview of how the markets are faring so far. Ma'am, thank you very much for your patience with us this afternoon. How is the Rand faring ahead of the local interest rate announcement?
Afternoon, Tutuzile. The Rand is trading steady. It's trading at 18 Rand 74 the last time I checked. That's a touch stronger from levels of 1880 earlier in the day. A lot of, I think it's pretty consensus expectations for the interest rate announcements later on this afternoon, shortly after 3 p.m., that the Reserve Bank Governor and the Reserve Bank in aggregate will maintain the interest rates at the current level, repo at 8.25%.
Is that your expectation for today?
Yes, in line with consensus expectation. There is a small chance that they could hike, but I think that that's very unlikely. Although you did have the latest inflation prints just almost breach that 3 to 6% band, but it still is within. And I believe that at this point, the consensus will be for a hold on the interest rates.
Let's take a look at a report from the World Bank. It's highlighted the toll South Africa's high crime rate is taking on the economy, with the bank estimating crime costs about 700 billion rand a year. Help us make sense of the findings.
Sure, that's about 10% of GDP, and this is coming from companies needing to spend on additional security measures, and this is as a result of the organized crime that is taking place in the country. So imagine if that spend could be diverted into other investment initiatives that would contribute towards growth in the economy, increased employment, better living conditions. So that just highlights, I think the report highlights pretty starkly just the cost of crime in the country. And we've had a lot of these reported, and from an NPA perspective, we are still looking to have some of those culprits put behind bars.
Spar's trading statement for the year ending in September is out. How has the retailer fared in the period under review?
The Spar trading update is negative, which is to be expected because they have had a pretty torrid year. They did have issues with the ERP SAP implementation that was put in place in the KZN distribution center. This wiped out for the company 1.4 billion rand in lost turnover as a result of them not being able to service customers effectively. So this cost is expected to not recur. In other avenues and other geographies where they are also situated, they have had issues with increased inflation, cost inflation, which has been higher than turnover growth. And so operations have been weaker in those territories, being Switzerland as well as Ireland. And then they have taken a decision to exit Poland, which they ventured into a few years ago, and that venture has not worked out for them. They have taken a decision that they will exit that region. So they are guiding for earnings to be lower by between 43 and 53% to the year end for September 2023.
Growthpoint is struggling to attract tenants into its office space, where more than 67% of its office space by value is located. Talk us through the update.
Sure. So Growthpoint is the largest REIT that's listed on the JSE. They participate in industrial, in retail, as well as office rentals. And particularly with office, more than 2/3 of it, as you said, is situated in Gauteng. Gauteng has been particularly hard hit even before COVID as a result of individual investors putting up buildings. Some of it speculative. Some of the buildings that have been put up are very premium grade office space, and this has kept rentals relatively flat, muted, and it has seen vacancies increase for Growthpoint, which is one of the largest office players in the country. And this has resulted in them having high vacancies within that office space. 18.9%. And if you compare vacancies in retail at 6% and in industrial at 3%, you can actually see just how much of a beating the office sector has taken. That's also been exacerbated by the migration to the Western Cape and other areas as well in the country. But they are saying that due to the asset disposals that they've taken in non-core assets and realizing some income from those sales, they are cautiously optimistic on the outlook, and they are seeing a recovery as well within the office space.
Thank you so much for your time this afternoon. Independent analyst Mbuso Zulu. More news for you in a few moments.